The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the wonderful Wednesday, the September 19th Trader's Edition. Trader's Edge. I'll figure out the name of my show. Just give me some time out there. But the Trader's Edge edition. Welcome to the show, folks. Great to have you with us. Of course, this is Fed Day announcement, which will take place, I suppose, in about 53 minutes out there. We'll spend the show trying to figure out if there's any tells in the market. You know, one of the games that used to spend a lot of time in Vegas. Now, when I say a lot of time, I used to be there every other week back in the 90s when I had many businesses out there. And so my free time, I took up the game. This is back in the 90s. I took up the game of Texas Hold'em. And as a player, when you play that game enough, what you end up doing is you start looking for tells against the guys that you play against. Even though I was an outsider, I was there so often it seemed like I was really a local, and you got to know several of these are folks that you see or have seen on TV. Even some of them still today you see on TV, giving commentary about the main event, the big event that's out there. So what's really cool is what do I try to do, especially on a day like today, is try to find some tells in the marketplace. Oftentimes, the charts are generating some type of signals. Now, I scoured the charts for the last hour, and I really haven't been able to find those tells. So I kind of threw it out in the Tiger's Den. I'll throw it out to all of you folks as well. I don't see the tells in the marketplace, but maybe you do. And if you do, we'd certainly love to hear from you, whether it's by phone at 877-927-6648, or you can send me an email, steve@tfnn.com. Inside the subject heading, put radio show question. Of course, I'll field any of your questions. Take a look at your individual instruments. Those may be easier, individual stocks, that is. It may be easier to decipher what the individual stocks are doing versus the markets out here. But we're going to go take a look at everything that we can, try to prepare you for really the close. So the first reaction at about between 2 and 2:30 is going to be the first reaction. I think there's a press conference out there, and then all things could change from there. So it's really going to be about the close out here. So as we speak right now, we've got the Dow. Well, all the indices are in the red, but I don't know that really means a whole lot. Is that just like the market testing Powell, kind of like a spoiled brat, testing, stamping their feet up and down? I don't know. You've got the spot volatility up 84 cents, no big deal. It's trading at 15.28. It's still below the 50-day exponential moving average. So what's the message here? Gold is flat. It's up $2, but we'll call that flat. Silver's not flat. It's down 26 pennies out there. But should we read too much into what silver is doing? Now, I don't know. How about Treasury bonds? They're up a full point and 5 ticks out there. They're trading at 160.18, I believe, slightly above the top of a daily profile. Does it matter if anything is trading above or below a profile right now at 110 in the afternoon? 110 in the afternoon. The answer is no. It's really going to be about the end of the day. So, look, I'd love to hear from you, as always. So you know how to do that. So let's go ahead and get this show started on Wonderful Wednesday. And let's start taking a look at what it is that we can identify. Now, as Jay pointed out, or somebody put in the den, hey, the NQ is at the low of the day. And so, yes, it is, or was a couple of ticks ago. But if we look at a 30-minute chart, so here's a tell. Is this a tell or not? I don't know. You got the NQ support is at, on a 30-minute basis, was at 78.8025. 30-minute basis. The bar that it's in right now, so this is the 1 to 130 bar, is going to be bar, or should be, it looks like it will be bar 9 of a TD setup 9 count. We know that on bar 9, 8, 9, because this is a lower bar, it won't be bar 8, but bar 9 or the bar following by bar 9 can be a turning point on a 30-minute chart out here. So is that a tell? I don't know. It's something to watch for. Most certainly out here. But again, intraday charts, looking at all types of intraday charts. Now, I say all types, I'm referring in time frames. I'm looking at a 30-minute, a 60, a 120, a 240, 300, and then the daily and the weekly time frames out there. And I haven't been able to find any kind of really great signal. Say silver. We said silver was trading down 27 cents, 1.5%. But what's silver doing? Silver's testing its most recent breakout area in its 30-minute time frame. That's at 1786. We're trading at 1786. So even though we've seen a percentage move, all silver's done. Just to put this in perspective, again, this is just a short-term time frame chart, but short-term charts on a day like today are probably the most important for us to take a look at. All silver has done during the day is trade between breakout resistance, breakdown resistance, and breakout support. 1804 and 1786. So if you're a person that said, hey, with silver moving lower, that was a tell, I'm not seeing that as a tell, and I'm not saying you, whoever you are. When I say you, usually when I say you, I'm really referring to me. So realize you're doing a radio show, or I'm doing a radio show, or I'm speaking here for an hour. Most of the time, I'm speaking to myself. So when it sounds like I'm speaking to you, I'm really just speaking to myself. I'm just having and I know it sounds maybe a bit wacky out there, but you got to talk to somebody. You got to talk to somebody. But so silver here, just using Stevie's tools, not much. There's no tell here. Silver trading between support and resistance. The NQ, the fact that it's at a lower low, and knowing that on a 30-minute basis, we're taking a look at a TD setup count out there. Is there a real tell that's going on? Boy, man, I wish I could see it. I don't see it. Take a look at the Dow equity futures contract, down to about 0.3%. Here's the 30-minute time frame chart. All it's doing is trading between support and resistance. Breakout support, breakdown resistance. They've both been tagged and touched. 27.020 is the support level, and 27.095 is the resistance area. Now, moving above or below either of those, that may be the tell today, but I'd really have to say that the tell for the day would be on the larger term charts out there. So the beginning of this segment was really just to say, hey, look, I'm looking at all these charts, looking for some type of tell to be able to guide me or you or anyone out there with regard to the market. That's why I put this out there. I have searched. You're taking a look at just a few of the charts that I've looked at. I've opened them all up looking for some type of signal out there. I don't see it. So if you see it, please call in. I give you the airwaves out here. Call in. Tell us what the markets are going to do, how they are going to respond out here. What I'll do and what I'll share with you during this hour, or during these next few minutes out here, and would love to take your calls and your emails and so forth. That would be easier. But let's take a look at levels that we want to be watching by day's end to generate signals for us. Now, we may not get those, but we'll know at least what to be looking for and what it would mean. So, for example, if we take a look at, this is for Jay, but this is for everybody out there. If we take a look at our equity futures contracts, those are going to be the best vehicles to look at to assist us with trying to identify whether there's a change in trend or a breakout. Now, the breakout could just simply be the completion of the consolidation breakout that is underway out here in the ES, the NQ, and the Dow. But there's enough topping signals out there that if we see a close below support, and we'll talk about those levels when we get back from this break, that could indicate a change in trend. So that's what we'll do. Of course, I would love to hear from you. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Folks, so we're taking a look at some of the, let's going to take a look at each of the equity futures contracts. My apology, I didn't even check to see if there were some requests that came in, but if there are, we'll get to those after this. But I want to, at least we can provide you, these are objective. So the cool thing here, what we're going to take a look at, they're just simply objective tools. That's not my subjectiveness. I'm not trying to push anything upon you. I'm just trying to utilize tools that provide you and I with great information out there. And that's about the best thing that we can do out here. Maybe we can do better, but let's just at least use those tools, those being the TAS market profile. So what do we know out here? Let me get rid of these trend lines out here. That's just kind of, okay. So here's what we know right now about the ES Mini. We know that last night, at the close, at the contract close, price closed right at resistance. 3,008 was the level. The close was 3,008. 3,008 and one tick out there. It's a bearish structure out here. Price right now is trading in essence right at the center of the box, where during this price range, which is the 2972 to 3,008 price range, both buyers and sellers believe there is fair value at that level. Fair value being 29.99. We're trading at 29.9750. So really no edge here, right? When we take a look at the daily time frame charts. Now, if this is a top, and there are topping patterns, you don't see it on this chart here. So for a moment, you'll just have to trust me on that. But it was an A to B equals CD to the upside inside of the ES Mini out here. A change in trend would occur if we see it close below 29.72. Now, even if we see a close below 29.72 today, you need to see a second day or a second bar in a row to confirm that. And then really, quite frankly, what the ES Mini would have to do would have to get back inside the consolidation. And so for the consolidation, we'll say it's right around the 29.44-ish level. So not only does the ES Mini have to close below 29.72, it really has to close below 29.44 to really say that there's a change in trend. But let's just make it simple. 29.72 is a nut. Likewise, a close above 3,008 would say to you and I that at a minimum to anticipate that the ES Mini would trade up to 30.78. I don't know which one it's going to be. I do know this much. Until you see support break, the existing trend stays in place out there. To me, it's as simple as that. So those are the levels to be watching. 3,008 in the ES, 2972 in the ES. That's your upside and your downside. And we know that there's a consolidation break. Here's the interesting pattern out here. It's the NQ. We've talked about this for the last couple of days, but it's always worth talking about again. And there may be somebody new that's listening in and they haven't heard that conversation. And here, the dark rectangular or box shape lines, the bottom area out here, that's the consolidation for the NQ. And when you do break through a consolidation, old resistance should become new support. And that's exactly what the NQ has proven to you and I 3 out of the last 5 or 6 sessions out here. So this is suggesting to us, if there's a clue, and this clue was given to us over the last many days, is that the market's going to move higher. Because the NQ is the one that can lift all boats, and it can crush all boats too. And as long as price, let's say, stays above, closes above 77.98, the consolidation breakout in the NQ is still in place. Now, it too has some market profiles. They've been in place for several weeks. It's rather large. They're still worthwhile for us to take a look at. And you don't get to 82.15, which is the measured move of the consolidation breakout, until you get above the 80.54 level, and 80.54 is resistance. Now, support, geez, all the way down to 73.25. So I'm not saying ignore it. I'm just saying that the NQ with regard to its TAS market profiles won't be as beneficial to you and I as the ES and the Dow, and now maybe even the Russell 2000. But let's go to the Dow next. If we take a look at the Dow, what do we know about it? Well, a couple of days ago, it formed a new market profile, new daily market profile. This too has a bearish structure, meaning the center at 27,118, closer to the top at 27,215 than the bottom. We can visually see that. You and I can see that if we're watching this on Tiger TV or in the den, you're looking at my screen out here. So a change in trend, assuming that the Dow has some type of topping pattern out here, which it does. And by the way, the topping pattern is the TD setup 9 count. I believe it is. Let's go take a, I take that back. It's not. Well, yeah, we'll give it the benefit of the doubt out here with regard to the TD setup. Price got right up to resistance, 27,329. It's backed off, but hasn't done really anything. We expect or anticipate a test of Stevie's green line. That's at 26,885. So the first reaction in the markets here may not be the real reaction. If you see a big push to the downside, it could be nothing more than a test of Stevie's green line that you and I have been anticipating in the Dow and inside the ES Mini. The NQ has already done its work out there, so it's really going to be about the end of the day. So in the Dow, though, what we can say is that if price were to close below 26,924, well, the first price objective to the downside is going to be back to the top of the consolidation, right around 27,248, and then below that, what price would do would get back to about the 25,910 area. That's the last price level where the Dow Equity Futures contract broke out. You can see that on our screen out here, 25,910. But as far as tells in the marketplace right now inside the ES, the NQ, and the Dow, the only one with a tell is really the NQ from the last several trading sessions, getting back to the consolidation, rejecting that level, and then moving higher out here. How about the Russell 2000? Russell 2000 has been a trip this week, has it not? And as we take a look at it right now, it's trying to form a new profile. There is a profile that is on my screen. I don't know if this profile is going to exist at day's end. The reason is because yesterday was also trying to form a profile. It blank canned. You can fill in the word there, but it blank canned that profile and put in a new profile. Now, the profile that it's traded, it's not that this one isn't active, but I am using Stevie's advanced Doppler system out here. If I don't use my advanced Doppler system to identify those profiles, then we're looking at an old profile, and that's not going to do you or me any good out here. So the top of the profile for the Russell 1597, which is really not that far away from the top of its consolidation or measured move, which is 1603 out there. The bottom of the profile for the Russell is 1561. If you took an intraday trade and you were short the Russell 2000 and priced at 1565 and support is at 1561, coming into Powell's decision, what would you do? Now, I don't know what you would do. I know what I would do if it was a short-term trade out there. Man, I would take my cashola. out here because prices basically made it back towards support, 30 minutes, 35 minutes before. Hasn't gotten all the way down there. You don't need to necessarily catch all of the shekels, so to speak, out there. But when we take a look at the 4 equity futures contracts, I believe that the numbers that you and I are looking at, with the exception being the Russell 2000, because I don't know if its profile is really going to take hold. The others, yes. But the others, I'm really just referring to the ES and the Dow. So those are the 2 areas to be watching. Again, not to repeat myself, but to repeat myself. 2972 is support in the ES, 3008 is resistance. Inside the YM, 26924 is support, 27215 is resistance. And if price closes inside those levels, well, then this was a nothing burger. And who likes to eat a nothing burger? I like my burger medium rare. Give me some grilled onions, maybe a nice piece of cheese, definite mustard, gotta add a little ketchup, and a nice steamed bun. Ooh, sounds good. And a beer to go with it, Ruby. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 88, S&P 13. So we've got a couple of questions that have come in. Let's go take a look at those. First one coming from Earl. Earl says, hey, Steve. Hey, Earl. If the ES sells off after 2 p.m., what level would be a buy? Now, of course, this question was written really before kind of the last 15-minute or discussion out here. And so, Earl, I hate to surprise you. It's probably no surprise. I don't know. I don't know. The problem is, sells off after 2 p.m. So, okay, maybe it sells off from 2 to 2:30. What's it do between 2:30 and 3? Oh, when Powell's speaking or what have you. So I would, I don't have any patterns out here. If there were a pattern, Rhodes momentum indicator bottom on an intraday signal or something along those lines, that would be great. But I don't have a price level to say, hey, here is the buy point on the ES Mini. Maybe you're looking at something specific and there's a reason why, there's a level and you would buy it. If so, call in or write me back so that I can share with everybody else out there, the reasons why or what have you. But I just don't want to say I don't have a clue, but I don't have a clue. So, nothing like a little bit of honesty out there. I think we just have to really wait to see how the day plays out, watch those support and resistance levels, see if there's anything that's broken there, and then look at those intraday charts and see if there's any kind of signals out there. So I wish I could give you a better answer, but at least you get a honest answer, and that's that. So Nick writes in, he says, hey, Steve. So, hey, Nick, last time the Fed decided to lower interest rates, the Dow dropped, and the same for the S&P. I think the markets are expecting a 0.5% drop in interest rates. If we only get a quarter or zero, I think we get to see the same thing as last July 31st. So there's Nick's, and I can't say you're wrong out there. I don't know. I just know that right now, and scanning and visually scanning, looking at all my screens, looking for some type of chart or looking for something that says, hey, here's a good there. Coffee, though, looks like that might be a buy out here, as opposed to trying to figure out what, I doubt coffee is going to get hammered, so to speak, because of what the Fed does or what have you. But if you take a look at coffee, now, not that it formed a great bottom or anything, but it did form a bottom, makes 4 waves to the upside, letter D, pulls back over the last couple of days. It was expected to see price and Stevie's green line, in essence, catch up to each other. That test is, for the most part, done out here. So this is suggesting that coffee is a buy, and I don't think that's going to be impacted by short-term interest rates out there. So that's one chart that kind of pops up on Stevie's screen that says, okay, you're sort of out of the line of fire, coming back and testing a key level of support, kind of like what Alex was asking me out there. What's a support level? And we can say on the ES Mini for Alex, it would have been, or would be, Stevie's, well, that's the 5-hour chart. We don't want to take a look at that. Not that we don't want to take a look at that, just it doesn't really flow into the conversation we were just having. But the conversation would take us to 29.83. Could be just a... Now, look, the ES Mini tests and rejects that level, Alex. That's a very bullish pattern and configuration. If price closes below 29.83, that is tells us more of a retracement is underway. But of course, we know we've got the TAS market profile about 10 points underneath that level out there. And as I had mentioned, the NQ has been testing. Not only was it testing the breakout of its consolidation, it's been testing Stevie's green line, which is held. If it does that again today, a real clear message that the NQ wants to, and it rejects it. So it tests and rejection. You close below it, and then 75.68 becomes the target. That's where the NQ had previously broken out. So thanks, guys, for writing in and sharing some thoughts with us. Encourage everybody else to do the same, or let me know if there's something that you want to look at, like Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Steve, I was calling about Adobe, ADBE.
Yeah.
They brought out their earnings after the close. The earnings were good. Expectations were disappointing. So the stock after hours went up about $8-9, and then it dropped about $12.
So could you
ride after the market closed.
Yeah. So
and I can't trade after the market closed, so I'm just watching. Any thoughts on it now?
Okay. So yeah, it was definitely let me see here. Let me get the chart up if I can. So the other chart up, ADBE, because I want to show folks what was going on, what we were taking a look at. And so I know that you had some type of call spread on Adobe. And my suggestion was, if I recall correctly, that I was looking at Adobe for a buy for myself, for subscribers out there, because of the Rhodes Momentum Indicator bottom, which included the hammer candle. But we first cautioned against that trade because price was struggling to get above Stevie's red line. There was a close above it yesterday. Okay, so there was a bullish engulfing. And then what you and I knew was that there was a bearish structure daily profile. Bearish in structure because the center line was much closer to the top than it was to the bottom. And that said that the exit on this trade was price getting a 289.54. And that's exactly what it did after hours. It got up to that level, and that was the time to jettison that position if you could. Now, the mere fact that you can't, or you weren't able to, and you're saying, what do you do now? Price is testing that hammer candle. It's still moving lower with less relative energy, but price is below Stevie's red line. So here's what I can share with you. Buyers are still trying to defend that position of the hammer candle from 2, 4, 5 trading sessions ago. And that level, by the way, let me give that to you out here, Ron. That level price level is 272.34. If you see a close below 272.34, it's really suggesting to protect the remaining capital that you have on that trade. So, volume-wise, the B point of a potential A to B equals CD to the downside was 4.2 million shares. And if today's close is more than that volume, which it is right now, and you close below that low of 272.34, what I would struggle with is trying to find a reason for you to stay inside that trade on Adobe. Too many things. It's below resistance on the daily. Stevie's red line, below resistance on the weekly. Just things pointing to the opportunity was selling at the top of that profile after hours yesterday, or having closed out the trade beforehand. But right now, you're in a precarious situation.
Okay.
I mean,
thank you very much, and I'll watch that 270-250 level.
Yeah, I wish I had different news.
I don't know if we'll get a rally in the next couple of days or not. We'll see.
Yeah, it's always a dangerous thing when you close below the low of a hammer candle. So that's my best input that I can provide you. And part of that is based on the longer-term chart. The monthly chart, a Rhodes Momentum Indicator pattern suggesting 244 would not be out of the cards for Adobe. All right, Ron?
Well, I should get out right now without much damage because of that spread.
I like that. I like
prudent thing to
getting
do.
out. Yeah, that's the trigger. Go ahead and pull it now.
Okay, thank you.
All righty, you bet. Steve Rhodes with TFNN. Be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go out to Jupiter, Florida, beautiful Jupiter, Florida, and speak with Bill. Bill, thanks for calling. Thanks for holding. How are you today?
Well, Steve, thank you very much.
Thanks.
Quick, maybe just a thought. I guess what the markets are telling us is that there is no direction. And presumably everybody's waiting on the Fed, and after the Fed, all that unfolds, we'll get some kind of, you'll start to get your technical indicators will start to work again, and we'll get some sort of a direction. But obviously at the moment, I guess the market's telling us it really doesn't know what it wants to do. And I assume that's really based on everybody's anticipating or waiting to see what the Fed does. Is that a fair observation?
Well, I think I think you're right in your conclusion. Is the market isn't certain what it wants to do. Now, the reason for that, or I believe that the reason for that, is because the market itself, you and I, traders that make up this market, what we know is that the market is at the resistance level. It's made its way up, in essence, to resistance. The Dow is the best example of that. And what I mean by that, Bill, is if you just simply take a trend line from the highs in January of 2018, the highs in October of 2018, when we saw a move in July of this year where it ran out of steam, in essence, was that trend line. If you take a look at the high so far of September, where prices run into resistance is at the high of that trend line. The S&P has made it up close to that level. The NASDAQ hasn't. The Russell 2000 is crazy it has been this week with regard to its trading. The reality, it has not broken above a key level of resistance, which is 1602 out here. Now we're looking at the cash indices right now, folks. So yeah, the market, when it gets towards resistance, it stalls. Does it have the gusto, to take it out? It's a marathon runner, but there's still 6 miles left in the race. And do you have enough energy to go ahead and and take out resistance, your own personal resistance out there? So the markets are still bullish because no key levels of support have broken. But the markets themselves also have, I can find all kinds of topping signals out there. And so knowing that we're at resistance, that's why I think there's this hesitancy. I can see the bearish side of the market. What I want to, though, share with you and everybody else, the only confirmation of a bearish directional turn has to be a break of support. And that's why I think it's incumbent upon me to say, look, one of the most important things I can do for each of us out there, listeners, is to make sure we have clear lines of support and resistance. And we use a set of tools to help us to define that. And so we looked at the TAS market profiles and said, hey, folks, this is pretty simple. From the bearish side, you better close below support. On the bullish side, you just need to hold support out there. So does that kind of, answer, support what you were thinking too, or?
No, that's very helpful, Steve. And I hadn't considered the fact that the markets are at resistance levels and they've just stalled, which they typically do anyway before they decide. But I think it appears to be a little bit hesitant or not sure what the markets are going to do. And I'm sure that the Fed plays a lot in that. But you're right. I hadn't even considered that everything is, making new highs or at its resistance levels, and we have to see whether they break those levels or whether they break down and then go below support, which would be, if they break support and they do it 2 days in a row, that would be a sell signal for you, correct?
Yeah, it'd be the sell signal would simply just be closing below support. You want to see 2 days in a row just to kind of confirm that, but still closing below that. So the answer is yes, you're right, and that says change in trend. Change in trend to where? Change in trend to the next level of support. In the ES Mini, it'd be 28.75. That's where price last broke out. The NQ, we took a look at the level, but just to give that to folks again, it would be 75.68. It's a beautiful thing being able to have these price targets that are reliable for you and I to understand where price break out, where price break down. In the Dow, it's 25,910. But there's no way I'm going to make that call. That's where the market is headed to, because we don't have a signal to suggest that just yet. So, but in the bigger picture, and look, everybody knows what the Fed is going to do out here. The surprise would be they're not going to cut rates, right? I mean,
that would be a shock.
Who would take that bet? Nobody would take that bet.
Oh my God.
Right? So for all intents and purposes, they're likely to cut rates. It's not that they're cutting rates. That's the issue. It's during the question and answer period, does somebody ask a tough question out there and not let Powell off the hook? That's really the key. It is, why are you reducing interest rates? And then trying to get the straight answer from him, which is likely not to happen. He's likely not to say, look, I got to try and save the world, and the world being the folks overseas. I mean, he could really say, look, folks, all of us in the U.S., because he's the Federal Reserve, and he can say, I track global flows of capital, Bill, like you and I do, like we do here during this hour. We track global flows of capital. And all of you that are parked in the U.S. and parked in U.S. dollars, which, by the way, overseas, they've got all kinds of folks that have got U.S. dollars over there. The U.S. dollar is king, and you're parked in U.S. equities, you're all going to be fine. But the rest of the world is kind of imploding out there. So I'm going to try to throw a life raft out there, and by throwing that life raft, I'm going to reduce rates. Now, assuming that what I just said is true, which I believe to be accurate and true, can he really say that? Probably not. But he really also can't truly justify in the U.S. why he's reducing interest rates. Why? Because the president is stomping his feet? Give me a break. Do your job. I love, I don't know if you watch football or college football out there, but one of the things that I love, I'm usually golfing in the morning on Saturday or what have you, but one of the things I love is they do a segment during College Game Day, and it's the segment where they say, you have just one job. And they always show these guys that just blow it. Well, Powell's got just one job, of the Federal Reserve for our country out here. He's just got one job. All we're asking him to do is to not blow it out there. But I don't know if that is really feasible. So, sorry for my dissertation.
Steve, no, it was wonderful. I enjoyed listening to it. And so I think as we look at the flow of capitals, and they're all coming into the bond and equity markets in the U.S., it seems like it bodes well for the equity markets through the end of this year.
Well, it does. Whether it's through the end of this year or not, I don't know, because let's face it, we're up towards resistance. So it wouldn't be unusual to see the market sell off. We're still in this unfavorable-ish seasonal time cycle out there. But I do believe longer term, it does bode well, that this is the place where capital will continue to flow through in the long term. So long term, yeah, this is the place to be.
Yeah, September, October, and
recession
bad months for the market. But once you get through that, with all the capital coming into the country, you would think it does bode well. And obviously that's your opinion as well, which is all good. Very good. Thank you, Steve.
Okay. Have a great day. That was Bill in Jupiter, Florida. We'll be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. Tom O'Brien will be hosting a special 60-minute live webinar Wednesday night for Gold Report subscribers titled The Next Leg Up in Gold is $1,794. Find out why. In this 60-minute webinar, Tom will be discussing how the bond market moves the gold market, where the gold demand trends are coming from, how gold outperforms fiat currencies over time, how gold trades an average of $110 billion a day in value, along with many more topics. Subscribers to the Gold Report just closed out 3 positions in the last week for profits of 28%, 35%, and 51%. Now is a great time to sign up for the Gold Report. You don't want to miss out on the next big run in gold and gold equities. Sign up now for the Gold Report by visiting the front page of TFNN.com and get ready for Wednesday's live webinar with Tom O'Brien. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. The 2-minute countdown. I wish I could provide. I am going to provide you with, I think, what is the best piece of advice or information that I have heard all day today. Comes from one of our denners, Maria in the Tiger's Den. And Maria said, it's time to hug your positions and to kiss your stops. And that is about as great of advice as you can, which I'll interpret this way. Just make sure you've got some stops in place. You know, and if they're mental stops, write them down on a pad of paper. And if that price level is breached, you don't have to deal with an intraday breach, just a close below it, kind of like Bill and I were looking at Adobe, and we know if there's a close below the low of a hammer candle, if you're long, you're wrong, kind of a thing. Like, I have music to my ears is when something has failed to break out when it should have, such as Adobe, and the music to my ears when Bill says, hey, look, I can pretty much get out right now with very little damage. That's what you do, because you've got reasons to get out, because all the reasons where it should have moved to the upside, it didn't. And when you can get out and retain all or most of your capital out there, that's the best thing. And that's the best advice out there, folks. Just have some stops in place. Most of you are traders that are out there. If it's your long-term funds, you're listening to the conversation of Bill and I, and we say, look, I can prove to you the global flow of capital continues to come to the U.S. I can't do it here in the next 30 seconds, but many of you have seen those charts or those data points long enough to know that is in fact the case out there. So longer term things look great, and then all of this other stuff is just the noise. It's just kind of like the noise of the Russell 2000 out there this week. We've seen nice swings to the upside, nice swings to the downside, and now what you and I have, folks, out here is we've got key levels to be watching: support and resistance. Watch the ES and watch the Dow Equity Futures contract that probably provides you with the information as to what the equity markets are going to do. So that was the best that I could do for you. And, we'll do it again tomorrow at 1 o'clock. But in the meantime, stay tuned, because our own Mr. Powell, he's up next. He's a polar bear. Doesn't get any better than that. And then after that, you've got an action figure, Obi-Wan Kenobi, Star Wars, because he's the star of all of our wars. Thanks for being here, folks. We'll see you tomorrow.